Hey there, fellow investors. Welcome back to our channel. And today we got a topic that's crucial for anyone just starting out in the world of investing. We're going to discuss the top 7 beginner investing mistakes that you absolutely should avoid. Trust me, these pitfalls can cost you dearly if you're not careful. So grab your notepad, hit that subscribe button, and let's dive right in. Mistake number 1, lack of research. This is a big one, folks. Many beginners jump into investing without fully understanding what they're getting into. You might have heard about a hot stock or a trending cryptocurrency and decide to invest without doing their homework. This lack of research can lead to disaster. You need to understand the basics of the investments you're considering. What's the company's financial health? What's their track record? What are the risks involved? Doing your due diligence can help you make informed decisions and avoid costly mistakes. For example, I once just paid attention to a good friend of mine about a trending stock. However, I'm now currently losing money through that one stock. It may be just a little bit, about $40, but still, if I didn't listen, I could be saving myself $40. Mistake number 2, emotional investing. Investing can be an emotional roller coaster, and one of the biggest mistakes beginners make is letting their emotions dictate their investment decisions. When the market is soaring, people get greedy and want to buy more, and when it's plummeting, fear sets in and they rush to sell. This emotional yo-yo can lead to buying high and selling low, which is the exact opposite of what you should be doing. To avoid this mistake, it's essential to have a well thought out investment strategy and stick to it, regardless of the market's ups and downs. Remember, investing is a long-term game, and emotional decisions rarely lead to success. Mistake number 3 is putting all your eggs in one basket. This is a classic blunder that can wipe out your investments in a flash. Some beginners make the mistake of investing all their money in a single stock or asset class. While the potential for huge returns might seem tempting, it's also incredibly risky. If that one investment tanks, you could lose everything. To mitigate this risk, diversify your investments. Spread your money across different assets like stocks, bonds, real estate, and maybe even some alternative investments. Diversification helps protect your portfolio from the impact of a single bad investment. Mistake number 4, neglecting your emergency fund. Investing is important, but so is having a financial safety net. Some beginners make the mistake of pouring all their available cash into investments, leaving them vulnerable in emergencies. What happens if you suddenly need money for unexpected medical expenses or car repairs? To avoid this mistake, make sure you have an emergency fund with at least 3 to 6 months worth of living expenses. This will prevent you from having to dip into your investments prematurely and potentially selling at a loss. Mistake number 5 is chasing hot tips. We've all been there, hearing about the next big thing from a friend, coworker, or online forum. But here's the problem. Hot tips often turn out to be not so hot. Following the crowd or chasing after trending investments can lead to disappointment and losses. Instead of chasing hot tips, focus on your own investment strategy. Base your decisions on thorough research and your financial goals, not on rumors or hype out there. Remember, what's hot today may not be tomorrow. Mistake number 6, ignoring fees and costs. This one's sneaky because it's not always immediately apparent. Many beginners overlook the impact of fees and costs associated with their investments. These can eat into your returns over time, significantly affecting your wealth building potential. To avoid this mistake, carefully review the fees associated with your investments, including management fees, trading commissions, and expense ratios. Opt for low-cost index funds or ETFs when possible, as they tend to have lower fees compared to actively managed funds. Mistake number 7, impatience and lack of discipline. This is perhaps the most common mistake of all. Investing is a marathon, not a sprint. Some beginners expect quick riches and lose patience when they don't see immediate results. I can tell you how many times I have seen friends and family give up on investing really quick within the first few months, weeks, or even days. To avoid this mistake, set realistic expectations and stick to your long-term investment plan. Remember, wealth accumulation takes time and discipline. So there you have it, the top 7 beginner investing mistakes that you absolutely should avoid. Investing can be a rewarding journey, but it's essential to be informed, disciplined, and patient along the way. If you found this video helpful, please give it a thumbs up and subscribe to our channel. And hit that notification bell so you won't miss any of our future investing tips and insights.